To be fair, I'm not sure what I've done yet. If you want to post a question, guys, please just put it in the normal chat area. I'm sorry about that. Okay. Right. So let's get back on track here. So what I was going to talk about is the basics of a trade plan, or at least said differently, the basics of my trade planning. It everybody, I think it's important here to remember that everybody has a different time horizon. All right, so I might be thinking, well, I'm not a Euro bear right now, which I'm not, but I have been and continue to be for 6 more months. But for right now, I'm not. But if you had to ask me the question, David, are you a Euro bear? I'd wholeheartedly tell you, of course. Okay? So your trade plans need to be tailored relative to the time horizon that you have in your mind for any instrument. Okay? Now, how does one determine that time horizon? And this is important, right? Because I have some friends that just inherited a bunch of money, and they've been asking me, well, David, where should I put my money? And my question back to them has always been, well, what's your time horizon on everything? And they're like, oh, we just want to make some money. And I'm like, no, the time factor is probably one of the most important things. All right, and I've given them zero advice because for some reason they've become experts overnight. And in their opinion, everything just goes up forever over time. So that's good knowledge. We'll see how that works out in 10 years. But my point being here is that time horizon for us as traders is worked out a couple of different ways. Number one, and probably most importantly, is where are you in the fundamental cycle of things? Right. For those of you that have seen my other webinars, do you know what I mean by fundamental cycle? All right, and I break it down in sort of raw format like this. I like to keep trading and trading logic very, very simple, because when under fire, which you are most times in Forex, you can't have too much convoluted stuff going on in your noggin. Simple is key. All right. Morning, Dave. We're actually getting some rain here today. Right. So, let's look at QE rates. All right. Anybody that tells you that Forex isn't driven by the anticipation of yield, they're lying to you. Forex is all about yield and all about anticipating a change in yield. Okay, so let's look at the euro here, the USD, the yen, the pound, I don't know, and the Aussie, for instance. Okay, in terms of QE, these guys are just sort of starting their program. Although we don't really know what it means and it's against their mandate and they haven't been too specific, these guys are just starting their QE. Interest rates, flat, but, showing no signs of coming up. Although I do think that they will recover the quickest of the bunch. We need to talk about that. Okay, the US. QE just finished. Admittedly, it's been picked up by the euro and the yen, but that's for a different debate. Interest rates. The anticipation of rates, although it's not going to happen in my humble opinion, the anticipation of interest rates rising is coming. And people are talking about sort of April, May, which is delusional, but they are. Okay? So the anticipation here is this. So you can see fundamentally already we have a diversion here, right? They're divergent relative to what they're up to. Okay? And these rates are supposed to be about 6 months out. This QE program here, we don't know. It's an open book right now, open checkbook. Question mark. Interest rates at minimum 18 months out. Right, the yen, QE. I mean, they just raised their QE program by a bunch. It's funny how they raised it almost the same amount that the Fed cut their last 15 billion. That's an interesting little one, isn't it? Funny how that works. So these guys are printing money like crazy, and interest rates have been on the floor for the last 20 years and not going anywhere. All right. Now, the thing here, however, is that the yen is at 115. That's something to note, isn't it? All right. The pound, we have interest rates probably for another 9 months. They always tend to follow. If the US is going to raise in 6, pound will probably raise in 9. They tend to follow the dollar. I don't think these rates are going to happen. What I'm trying to say is people are anticipating them where we stand here now. Okay? And then the QE program is slowing down, so we'll kind of give it a flat line, but still in place. These guys, no QE, Aussie, interest rates flat, but yields still considerably better than the rest. So if anybody's going to recover on some dollar weakness, it's going to be this guy. All right. We have you didn't miss a lot, but we have so now it's a case of, all right, so here are our time horizons for the major fundamental move. So for the major fundamental move, the euro dollar is still going to be weak, probably 6 to 9 months. The yen, weak in theory, but we need to look at that chart to see if that works out in practice. Okay, and I'll swing back to this logic. The pound is going to follow the dollar. You noticed how the index has hit major resistance over the last couple of days. So the pound is like, don't worry, I'll pick this up. It's interesting how these two play off each other, and if you're a pound dollar trader, you've got to recognize that. Because of, guys, you've got to remember, if, let's say the US raises interest rates, even though they're not going to, let's say hypothetically, they raise interest rates 2% by Christmas of next year. Okay? And they stop raising rates by October, and they are flat. And the anticipation, and the Fed tells us we are going to sit on these interest rates. Okay? And then Draghi comes out and says to us, okay, well, the QE program is working. We're starting to see signs of inflation, blah, 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 improvement here and there. We are gonna investigate raising interest rates sometime in 2016. The fact that the US has paused interest rates and that Draghi is talking about raising interest rates changes that fundamental picture. Even though the US is in the process of raising rates but in a pause, the euro will strengthen relative to the dollar because the anticipation is for them to raise rates coming up. Does that make sense? That is the fundamental change. 50-50, Boyke. Because I promise you, trading with the fundamentals is going to make your life a lot more easier. TY, what about the the Kiwi rate cuts? I've been staying away from the Kiwi a little bit. New Zealand dollar is kind of one of those things I'm looking to trade when I want to trade something against the dollar when the dollar is going to get weak. I don't anticipate the New Zealand dollar falling out of bed, honestly, despite interest rates perceivably coming down. All right. Let me finish up with my thoughts here on this. Okay, so the time horizon without trading is a fundamental one. Okay. However, number two is correlation, and the technical basis is also another major time determinant, isn't it? And remember that those of you just walking in here, the point of this webinar is to give you a little crash course on what goes into a trade plan. Yes, Boyke, I think if you're trading short term, you need to know the stuff. If you're trading long term, you need to know the stuff. It's just my humble opinion. So it makes the world go round. It's very interesting too. Okay, so let's look at something here real quick. Now, the Aussie has been dropping hard. Okay, and I'm gonna just find dollar index. Okay. Here is a silver chart. Here is a dollar index chart. Okay, and I'm going to draw this one out here on the dollar index to a weekly. We'll crunch it up. Take it out to a monthly if it will allow. Right, here's a monthly dollar index chart. Okay, and I'll just get rid of this little trappy here. Now, this to me smacks of something that would like to go higher. It's made this nice bottom, right? Looking good. The price action's changed. This by price action, raw sort of technicals is up. However, would you agree that it's starting to get into a very interesting resistance area? I would tend to think that this zone will at least do something like that before we go like that. Bear in mind, this is a monthly chart. So a reaction in this area is to be expected, isn't it? So yes, I am a Euro bear. But am I a Euro bear here? No. My time horizon for being a Euro bear is 6 months. But am I a Euro bear on the immediate? Remember, the dollar index is 60% Euro. So you're really looking at the inverse chart, right? Like you can't really look at the dollar index and think that you can trade the yen. All right. The dollar index could go down. What do you talk about, Boyke? All right. So if I look at the euro, does it look bullish? Like, that's what I'm saying is I expect it to go down a little bit. I expect it to react to this area. That's going to give us a little bit of euro strength. Now, I'm a bear, so I'm not necessarily looking to long this puppy. All right, and in fact, when I look at the daily chart, or the daily chart, it looks very much like a little drop and pop situation. It looks something like this to me. Yes, what I'm trying to say is fundamentally, the dollar is up. There's just, I mean, it is. What I'm getting at though is that the correlations, the resistance and the support hit, respectively, says to us that dollar weakness for 3 or 4 weeks is to be expected. And the euro to me looks absolutely sort of something like this. And that would take us up to that 88.40, 88.50 zone on 88.40, 88.50 on the maybe not a lower low. Given the information, I think it will make the lower low, and I'll tell you why. Is because I think this dollar index is a little bit shy. The other thing too, Peter, is that I'm not looking to long the euro. If I want dollar weakness exposure, it's going to be in the Aussie, it's going to be in the CAD, it's going to be actually in the pound. But I expect the euro retracement. Does that make sense? So if I want, if I'm trying to get short the dollar, euro is not my instrument, even if it goes up, because I don't like trading against the major fundamental wave. All right, and the other thing too, I think that the euro will make a lower low of sort of the 25-20 zone is just because I think this dollar index is just an inch short of that resistance. You know what I mean? I think it's close. I think it's close. I like to anticipate, to be honest. I feel more in control in anticipating. So that's why I think, hey, it could make a lower low. Morning, Kelly. Yeah, good, thanks. Yes, boy, yeah, I do. Yep. Big crystal ball. Right, now. The other thing to look at too is this. So we've got the dollar index hitting resistance. We have silver hitting a huge area. This was resistance back in 2006, 2005, 2009, and we have this trend line right below that. So we've seen sort of this deflationary run on these metals, but hitting massive areas. Huge. So if I was a betting man, I would anticipate this zone, even if it drops into the 14s. If it drops into the 14s, that's fine. I still think that this is something that merits enough support that it's going to go back to 17, 18 area, which I'm actually happy to take that trade. That trade's got minimal risk and a lot of upside. All right, so dollar index, resistance. Silver, support. Gold, less interested. It's very, very convoluted. Okay. So we have a few things we have a few things suggesting to us that our fundamental bias is about to be, our fundamental bias, we're about to have the market run against it for a little while. Can you see that? So then we have to say to ourselves, right, the technical horizon now looks different to the fundamental horizon. For how long, roughly? I don't know, a couple of weeks, maybe a month. So we have that in the back of our mind. Is that, okay, we're now going to probably have to trade against our fundamental bias for a little while. Now let's think about the pairs that we want to do that. Right? And like I was saying to you, it's probably going to be stuff like the Aussie. It's probably going to be stuff like the CAD. More specifically, the Euro Oz. Right? You know, Aussie going to be weak, Euro going to be weak. Euro Aussie is a pretty good pair. Fundamentally, technically, good. Makes sense. I expect a little upside on the pound dollar. Lots of support coming up there. But what about maybe using an opportunity like this to look at something like the Euro Mexican Peso? For those of you that don't know, the Mexicans have had every large car manufacturer and their uncle going down there to build their factories. And a lot of the US jobs that were being filled by folks coming over the border, those people have now gone back. We have droughts in California, and they're like, oh, we'll just go build some cars. So there is a little bit of inflation coming up down south of the border here. Okay, so the Euro Mexican Peso is probably not the best thing to trade on the short term because we just looked at that dollar index and that's going to help the euro. But it's a good thing maybe to plan in the future. Okay. So here's a monthly Euro Mexican chart. And a sort of enduring impression here is this could potentially be a bullish flag, couldn't it? Possibly. But fundamentally, the message is different. And this monthly stochastic down like that tells me that it's only halfway done with this move. I just know that from technical experience. All right, so if I go to the weekly chart, it's showing a little bit of divergence here. We know that dollar index is coming off some things. We know that the real support, even if I look at it horizontally and the trend line is a little bit below here, you know, we can probably take it to this level because of these lows. So I have a little fundamental bias down. A technical bias on the medium term is down. But I know that the euro is hitting some good resistance or good support relative to the dollar index. So maybe then I wait for not just a little sort of swing fib here. I wait for one that is a little bit more real to the next level. 1750. And my trade plan is to look to short that down to the support area of 1660. Make some sense? So I've got fundamental bias, then I've got time horizon and sort of area or where I am relative to that time horizon. Okay, and then I can narrow it down to a technical look. You know, then I got to start thinking about how much money am I gonna commit to this? Am I gonna trade it with a stop loss? All right. do I believe in this fundamental position? You see, my thing is, Boyke's question earlier on was, if I'm a swing trader, do I need to know all this stuff? And here's the thing, guys, is you have to believe, or at least for myself, I have to believe in what I'm trading. So even though I think, and I have it on decent authority, that this is a very good buy here for euro, sort of a drop out of this last thing here, 25.10 or whatever, into the early 29s, late 22s. Even though I'm thinking that this is for many reasons, a good long into the 26s, which is the better part of 300 pips, I don't believe in it. Does that make sense? Yeah, I'm happy to look at the S&Ps. I don't believe in it. So if I'm in this trade down here and I'm wrong and it kind of trickles down some more, I might panic and get out because I don't believe in what I'm trading. I don't believe that the euro should be stronger than the dollar, even though I see multiple reasons for it to go up technically. So that's why I like to trade in alignment with the fundamentals, because then I can sit there, shorting through here and going, fundamentally, my plan is sound. I've never heard of that, Boyke. Is that the thing is, I mean, it's depending on what you see, though. I mean, what do you see? Right? If I wait for everything to roll over, then I'm going to be seeing stuff pretty freaking late. I'm way more happy speculating on something I believe in and being wrong a little bit than I am reacting to something that might put me in an awkward risk situation. It's horses for courses. It's totally, I see merits to both sides. So it's like, the question was regarding the S&P. So let's look at that. I mean, this will illustrate your point. This will illustrate your point perfectly. If you looked at this S&P, here it is. Right, but my problem is that when something starts to trend, it can be the hardest trade to get into because you can look at the trend and think, oh, well, it's already gone 300 pips. Do I really want to get in here? And then you look again and it's gone 1,200. That's my problem that's my problem with trades already moving, is that I always feel exposed. Whereas if I'm like, okay, well, this is a very logical turning point, and I'm starting to see signs that the technicals, yes, happy to look at oil, see signs that the technicals are starting to marry up, I'll take a shot. I'm way happier with that. And I don't mind being wrong for 3 weeks. The euro, I was wrong for 6 months. But then finally I was right, and about 9 or 10 positions made money. And when I look back on that, I'm happy because there was very little to sink your teeth into to get back into that in a logical way. Yeah, you're absolutely right. There are lots of ways to look at the same thing. And that's why I'll never tell you that one way is necessarily better than the other. It has to be logical in your mind, because then you can trust it. Then you can assume the risk with a clear heart and clear mind. If you know what I mean? Thank you. Thank you for the tip, Oiki. That's very generous of you to volunteer that information. Yeah. Okay. Thank you. Right. So point being here on the S&Ps is let's look at this on a slightly longer term basis. Actually, I'm going to do it on the futures chart just because there's not enough data here. Wayne and I share a lot of the same philosophies. We share a lot of different philosophies. The interesting thing is that we two individuals. All right, I'm just going to switch this real quick. 21. Right. So I'll take off the shorter term stuff. So I'm trying to find, trying to get the longest data I can yet. Yeah, I mean, Wayne did a lot for me. I've got nothing bad to say about Wayne whatsoever. And if you want a guy that knows fundamentals, I mean, he's as good as it gets. Sorry, I'm just working on something in the background yet. Okay, this will work. It's the 50, that's fine. Yeah, it absolutely makes sense. In other words, do I rely on um no, I'm not with FX Bootcamp anymore. Haven't been for a couple of years now. Do I rely on the horizontal stuff more than like trend lines and things? Yes. Absolutely. Yep. Okay. So what I wanted to show you is this. Let's go to weekly just because we'll get more instances of it. This was the crash of 2008, 2009. But I've got a 50 MA on here. Doesn't make any difference. Okay? Yeah, love trends. Love range trading. Trends are easier. But I find trends harder to get into and feel my risk is safe. Prefer to try to pick the turning points. All right. So what I want you to notice though is, do you see the distance that one tends to get from these major moving averages? Okay, hold on. Your question's unanswered. No, I think I answered it. Oh, improve your fundamentals. Guys, I think that I think that if you have a general, you know what to me improves your fundamentals more than anything? Reading central banking statements, minute meetings, and listening to what they're telling you. Um, Ben, I'd been teaching for a long time, and it was just, I don't know, I wanted to do something else. I wanted to just sort of trade, and I was okay with that. Right, fundamentals, and then we'll talk about this S&P real quick. I'm running low on time. Uh, exactly. So, right. So the central bankers have a way of telling us what to trade, or at least where to look to trade, right? Mario Draghi comes out 4 or 5 months ago, and his exact words in his press conference was, "We are going to be we are going to be heading in a divergent direction to the Federal Reserve for the foreseeable future." You don't have to. There's no rocket surgery in that interpretation, is there? None. He's telling you the euro is going to be weak relative to the dollar for a long time. He's telling in plain English, right? The, he says the downside risk is way more than any sort of inflationary risk. We're going to have to do everything we can to. Although the euro is not a target of the European Central Bank, having a high euro and low inflation is something we have to guard against. He's telling you the euro isn't a good idea. Exactly, Roland. The Bank of Japan comes out and says, no, we're still shooting for our 2%. They're delusional. They haven't seen 2% in 25 years. But they told us they're going for it. And the Feds told us we're prospectively going to raise interest rates. That ain't going to happen. But the anticipation is there. So really the best way to improve your fundamentals is to just have your eyes and ears open and read the statements. Read Beige Book when it comes out. And absorb that and try to put that into a perspective moving forward. There's a lot of also, I don't think there's any harm in going back and just sort of um, watching webinars here at FX Street that are recorded from those folks that talk about, fundamentals, just absorbing a lot of that. But the core root of it really fundamentally is, where are you within that cycle of the anticipation of interest rates? And 99% of the time, the central banks are telling you in black and white where you are. Okay? So, number one piece of literature, number one piece of viewing is going to be their press conferences. Beige Book meeting, the RBA meeting notes. Read them. It's all in there. Then the other thing is just, talking to people from Europe, talking to people from the United States. This stuff really helps. Just basic sort of common sense things. I hope that answers your question. I don't have one specific source of reading that's going to put you in a great place to be a fundamental guru. But I think for the benefit of trading, really reading and keeping up with the central banking statements, minutes, press conferences, you're going to be in great shape anyway. Great shape. I'm also, if you want to reach me at Forex David on my Twitter, is probably the best way to do it too. I'm happy to answer any questions. Okay. They are hard to interpret. ish. I mean, they take time. This fundamental thing, guys. Um, the hardest thing about fundamentals is getting the time horizon right. Let me just finish up with this S&P, and I'll jump right into that oil real quick. Okay. What I was talking about with this S&P is this. This distance between this, in this case, the 50 MA, it repeats almost to the point. Forget this big drop. That's an anomaly. Okay, this distance relative to this moving average repeats over and over and over. It did here, and it's the same distance here. It's telling me that we may not come all the way back down, but it's telling me that a little retracement is due. Okay, then we look at little things like this. So is it due for a drop, like a major correction? No, I don't think so. But certainly sort of something like this, and then maybe we go up some more. Yes. And we've got a little bit of this going on. Then it's a case of maybe if you really want to be patient, waiting a little bit more on the short term, you have a little change of trend there-ish. But more importantly, you got this hourly stochastic pointed down. Oh, but David, you couldn't have possibly seen that. Pull up an oil chart. I like the 21 EMA and the 5. I thought that maybe down to about 1080, Boyke, and then up again. Thank you, Dave. Thank you. FX Street, is it okay if I go over maybe just 5 minutes? I do not know. Trying to show you today's, right, 13th, yeah. So this was my analysis today for the S&P 500. Little push up towards 2045, 2050, and then a little rollover on the spot. Okay, perfect, thank you. And then coming down to the 1990 and back up. And that was based almost solely on the fact that it's been at this level for 3 days and hasn't broken. And that logic that I showed you, as far as the distance from the moving average. So a little bit of technical stuff. There's fundamentals involved in terms of I don't think they can tell us anything we don't know right now. Therefore, most of it's priced in. And that the fact that we really haven't been able to break anything around here for 3 days. Not to mention the fact that, if you want, you can splash a little trap on it like this. And that's reasonably compelling. You might have something like that. And then you can measure this and project that down and get today's move. It's probably, 2015 or so. All day, every day, Boyke. Okay, so let me... But the question was, your question initially was, do I like to anticipate or do I like to follow? I like to anticipate as much as anything else. I do not have a website. I'm not here to sell you anything. Right, oil. Couple of things here. I'm not an oil trader, but I do know that fracking has put the cat amongst the pigeons. Global deflation. Guys, there are tons of... I've done webinars now for, 5, 6, 7 years here at FX Street. So there are... there are... I think I've done pivot point... And if you go under my profile at FX Street and just go to my archived webinars. I think I've done tons of good stuff there. Go check it out. And if you want me to do pivot stuff next time, I'm happy to do that too. I'm happy to help anyone. I don't offer mentorship specifically, but I'm always happy to answer any questions you have. Right, so oil. I mean, oil to me looks like it's at major support. Yeah. Oil to me looks like it's at major support. But we still have, this monthly and things is down. I think this could breach this a little bit. This to me looks like something that I may not necessarily want to do. May not necessarily be something I want to short here. No ways, but I would anticipate a little breach of this and then a rebound. It's the same logic as we were talking about earlier. Look at the distance relative to where it's come from. Nothing goes straight down or straight up. We can even measure this. I got 1 minute. Can do this. Can do this in one. And this isn't best logic, but you'll just see how these repeat. Specifically on the bearish side, look. Same. So a little bounce in oil is to be expected. It still looks bearish to me. I mean, I would expect something like this to develop. A little lower low, maybe to about 72, 73. And it comes back to about 78 and makes another little run at it. And then a larger retracement. Does that make sense? So, major trade here, short at about 83, maybe a sneaky long at about 71. Because it's unlikely that we're going to stretch that elastic. It's unlikely we're going to stretch that elastic much more than that, despite the inflation or global deflation. And when I look at the other commodities, specifically silver, I'm running over my time here. I'm gonna hustle. Specifically silver, I don't expect us to mow right through this period like it didn't exist. I expect at least sort of this kind of thing, and I think you could expect the same thing on oil. So, a little drop and then a recovery just because of how stretched out these things are. And guys, to me, that could also be the top of the S&P for a while, around that sort of 2060, 2080. It's Forex, David. I hope you learned something. I didn't cover exactly what I wanted to, but I felt like answering some of your questions was equally as important. Okay. And guys, if you have any questions, email me, ping me. John, I do less of it, but like I wouldn't long the pound right now without some price action confirmation. Thanks, Dave. I would need some help on that. No, guys. My public contribution is this 45 minutes and a little bit of Twitter stuff. The rest I just do my thing. But happy to answer any emails you have. So, okay. Newsletter. All right, guys. Thank you for attending. And if you need anything, give me a shout. Many thanks. Thank you, FX Street.